Hey everybody, NFT fans, welcome back to the NIFTSY Podcast. I'm your host, Eugene, aka Crypto MC. We explore what's going on in the NFT space, separate the essence from hype, and try to realize the potential of NFTs to change the world. And today, I'm very proud to say that I'm joined by Nelli Orlova. She is the co-founder and CEO of InnMind. InnMind is the #1 deal flow platform for startups and investors. I've been working with InnMind since 2017, the year I had started in the blockchain space, and I am 100% confident that Nelli and her team do their best to develop crypto startup ecosystem. So Nelli, I am super excited to have you on the NIFTSY Podcast.
Hi, Evgeny, and hi, everyone who is watching us. I'm also very flattered that you invited me and honored that you think I can add some value to this amazing podcast.
Absolutely. We're going today to deep dive into the topic, how to raise funds for your NFT project. But before, I would love to hear the story. How did you get into the blockchain space?
Oh my God, I was not prepared to go give a short overview of the beautiful storytelling, but to be honest, a short disclosure, I am not crypto expert. I am not expert in NFT, and I have nothing to do with trading, with holding cryptocurrencies, etc. My experience with the blockchain and crypto sector started also around 17, 18, when at that time I lived in Switzerland and moved from French-speaking parts to Zug. That was at that time and still remains to be the Crypto Valley, a well-known brand in the crypto ecosystem, the crypto-friendly jurisdiction where Ethereum Foundation was born and a lot of other noble organizations in this sector. And of course, when you live in Zug, you kind of can't stay away from this topic. Every driver, every person in the shop was talking about Bitcoin, cryptocurrencies. And at that time, we also have seen in InnMind that a lot of startups and investors got curious. At that time, it was ICO hype. So everyone was kind of curious, what is ICO, etc. So I joined Crypto Valley communication group and then later on investment group. I started to learn from experts there, from a lot of great people with amazing knowledge. I started understanding of the basic principles and fundamental mission, if we can say so, behind the blockchain. For example, like this peer-to-peer capacities, bringing trust to the relationship between different parties, and of course the opportunity to keep the records and to keep them safe without any party being able to change something afterwards. At that time, we were not participating in the ICOs as InnMind, but while building the knowledge base, we understood that we could contribute at least from the ecosystem perspective. So we started to do a lot of meetups in Switzerland and also expanded them to quite a big event, the Blockchain Leadership Summit. That was our attempt to create a friendly space or place where industry experts, industry players, regulators, investors, and startups could sit together and discuss the challenges and opportunities of the blockchain sector. And at that time, I also learned a lot about crypto startups. But to be honest, at that time, we made such a huge shift towards all this blockchain and crypto sector that a lot of companies started to think that InnMind is about crypto startups. And therefore, since 19, our last summit in Barcelona, we kind of cooled down these activities and focused more on equity deals in so-called traditional sector. And since the beginning of this year, 2021, when the new wave of DeFi, NFT, crypto startups came to the market, and when we started again build traction, introducing startups and VCs from this sector, I had to learn from scratch again, because during this short period of time, like 2 years, everything changed. a lot of things turned upside down, and what I learned during ICO times now is not relevant anymore. Everything got completely changed, and in some aspects more mature, of course.
Well, but how many startups are right now under the InnMind harness, and how many of them are NFT related, and the main business models regarding NFTs? What may you say about that?
So right now on InnMind, there are around 50,000 of technological startups from various sectors, including artificial intelligence, business intelligence, big data, blockchain, fintech, clean tech, etc. I can't say how many NFT projects, can't say exact number because I never counted it, but a lot. From tokenized startups perspective, I think we have around 700 of 800 of tokenized startups among these. And as I mentioned, since the beginning of this year, the deal flow of tokenized startups increases every day. And I would say that especially last 3 months, maybe I see that the huge majority of new tokenized startups coming to InnMind for fundraising, they are more or less related to the NFT sector. Answering your question about business models, so majority of these startups, they try to create something around commissions, so commission transaction-based business model, plus, of course, the utility token model. So meaning that they have some token which is used inside their ecosystem as a payment method or as an incentivizer of various behaviors or actions from their users. It can be also the token that creates added value through time, and so on and so forth. Plus, additionally, we see the working business models, as I mentioned, on the transaction model. Sorry for tautology.
Okay, how did InnMind startups, NFT-related startups, basically did raise funds or do raise funds? The general way of doing that.
Yeah, definitely. I will switch now to this topic because it's very important, but maybe just adding some details to the previous question. So you asked about business models. I'm not sure that it was the correct theme. Maybe you were meaning what type of NFTs they use in their business models. I mean, not type of NFT tokens, but for example, we have marketplaces. A lot of marketplaces and new NFT marketplaces. Yeah, we have a lot of projects that use NFT for copyright industry, and it refers both to texts, to music copyrights, to any kind of other authorship rights. We also see quite a number of models using NFT in the gaming sector. Also including, for example, the NFT token proving the right of ownership of the gamer for this or that gaming asset. Then I also observed a few startups doing something like derivatives, using NFT for derivative market and creating synthetic derivatives there as well. And of course, quite a few, very small amount, I would say, startups that are doing something in the infrastructure sector. And by the way, NIFTSY is one of the brightest ones because they are building the whole infrastructure for other NFT projects that can be used by them to operate the value. I like them a lot. And I guess that the first funding by NIFTSY was received from InnMind Network. I'm super proud of this.
Okay, so the basic way to raise the funds for NFT project is, in general, join the InnMind network first. The main advice. That's a joke, another joke. Yeah. So let's talk in general. What are that's two types of funds the typical NFT or crypto startup may raise in fiat money and in cryptocurrency, not remembering about ICOs. The first way, what are the real ways in general to raise funds for an NFT project in fiat money? May you explain?
Well, it's typical fiat fundraising, equity fundraising. For that, of course, in addition to the must-have things like a great idea, great team, and logical business model, etc., they will need to have a legal entity. In that case, DAO is not enough, because equity investors, they have nothing to do with DAO, obviously. For that, projects will need also legal and financial setup. And they will approach, most probably, traditional VCs, plus some of the crypto VCs. As per my knowledge, they also invest in equity of tokenized startups on the early stage. Then another, so that is the answer regarding equity fundraising. I would not split that for equity fundraising, for example, pitch deck is super important, and for tokenized fundraising, not. That's not the case. All the rest, what is referred to the fundraising from the VCs is relevant both to equity, to token raiser, and other types of fundraising. The only thing startups should understand is if they go into, and another option for, around equity fundraising is to go into the accelerators. There are a lot of great accelerators on the market. There are, for example, let me recall some, Berkeley Blockchain Accelerator. There is also Outlier Ventures. There is also DeFi.org. There are quite a number of them. So you just Google and get them. They usually invest some money for the portion of equity, and they also help you to settle up your business to get some traction, first traction.
Okay, gotcha. Now, today, we are in 2021, not in 2017, so ICO hype, ICO era gone. But is there a way to raise funds for NFT-related startup in cryptocurrency, for example, or in cryptocurrencies? Working ways today?
Absolutely. So the second type of fundraising for NFT and crypto and blockchain startups, if they have tokens, so it is token sale. And I want to elaborate more about private token sale, because it's in some kind, it's very similar to equity fundraising. It is not ICO or IDO. It is the phase, usually on the early stage of your development, when the project pitches to VC investors. Well, in many cases, we see that in that stage also a lot of angels join in, and even influencers in the space, like bloggers and authors, etc. They also co-invest in the tokenized startups on the early stage. But in general, private token sale is very similar to the fundraising from traditional equity VCs. You have to have a pitch deck with a clear explanation of your value proposition, of what you are building, of the competencies and expertise of your team, of the business model and tokenomics and token metrics, which is also very important. Plus, of course, and unfortunately, many projects forget about that, competitive landscape description and your differentiation from competitors. Because when we speak about for example, when we speak about NFT marketplaces, there are so many of them already existing on the market, and you can't imagine how many of them are just raising money these days. And it is very, very difficult sometimes to understand what is the real differentiation between them. Sometimes founders forget. They take 1, 2 top competitors on the market and say we are better, but they forget that the market is way more competitive than they think from the first view. And of course, investment offer, so which is in this case token metrics. What kind of what kind of price for tokens do you have for the early investors, pre-seed, seed round? What will be the token price for the IDO public sale? What allocation of tokens is considered for the team, for advisors, for tech part, for ecosystem, if there is any, for liquidity pools, etc. So all these metrics should also be described not only in your white paper somewhere else, but also as a one-pager in your investment pitch deck.
Well, it's almost impossible to cover all the nuances of the process of raising funds. So thank you for describing a general approach to raise funds for NFT startups, regardless of money type, fiat or crypto. By the way, what are the main mistakes in raising funds you've been observing regularly during your work?
The main mistakes. Okay, just 1 second. Before coming to the main mistakes, let me one more time to underline what is the core difference, okay? I should confess that the speed is one of the core differences, of course, because even if you are NFT startup, if you are raising equity money, get prepared that it will take maybe not half a year or 4 months as in traditional business models, but it will take quite some time. If you are doing token raise, then you will have more flexibility in most probably, if you are a good project, you will close the deals faster. For example, during, well, of course, we can't compare, let's say, normal with the bullish times, yeah? But during the bullish market on March, April, we were closing deals within days or sometimes hours. When we just present a startup to an investor, they jump on a call, investor likes it and gives an offer. Right now, the timing slowed down definitely because a lot of crypto-related VCs, they either reconsider their investment strategy or became more picky. They also observe what is going on with the market, etc. But in general, this is the core difference, the speed and flexibility. And second, related to flexibility, another difference is that to raise VC money from the private round, for you, it's enough to have a DAO structure. Many investors in crypto space, they are absolutely okay to invest purely in DAO structure without any legal entity. If you are doing equity raise, forget about that. Even for the token sales, sometimes we have an exceptions, the following exceptions. If it is a regulated VC with LP structure, then they will not be able to give you, to invest in your project, even on the token raise, if you don't have a legal entity, just because they are not allowed to. But there are not so much regulated VCs, and there are so many VCs with flexible structures, not LP structure, but when there are like 4 wealthy friends joining efforts to create a VC fund and investing in crypto startups, and then for them, DAO structure is fully enough. Yeah, sorry for jumping from one topic to another.
Okay, so about mistakes, what are the main mistakes raising funds you see regularly in your crypto colleagues?
Well, my God, there are so many mistakes, which ones to choose? But if I, for example, recall, try to compare all those startups that raised funds from our VCs with those startups who did not do it, maybe number one difference, if we consider that the projects, both projects are more or less on the same level, yeah, good, solid, with obvious investment potential. The core difference is in the founders, actually. Founders should understand, and this is also very similar to the traditional equity fundraising, that fundraising is a job, guys, and you can't just rely on the introducers or advisors to close round on your behalf, or you've pitched to investor and then you are expecting something from investor on a passive way. You should be proactive. This is my pain, because I'm continuously reminding about this to the founders. When you talk to investors, you should be able to keep communication going. You should not hesitate to remind about yourself. You should not hesitate to share with them the updates about your traction, the updates about new partnerships or new investors joining your cap table, etc. So this is one mistake. Number one is being passive, passively waiting until investors will come in and bring you millions of dollars of investments. Another mistake during fundraising is, well, to be not prepared enough. If you don't have a normal, a good pitch deck with describing all the factors that I already told you about, value proposition, and as clear as possible. We see a lot of buzzwords in the pitch decks. If you write about your projects that this is the new level, the new something, yeah, I can't recall exact definitions, but something blah blah, fundamentally new, amazing technology, faster speed, more value to the users, la 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 la. So sorry, but this is blah blah.
Hopefully non-specific terms, general terms. We are the best. Just invest in us.
Exactly. So this is also another mistake that many startups are doing. Another mistake during fundraising, and this is very relevant for tokenized fundraising, for token sale, and I've seen this in many NFT startups, is that, well, at the beginning, first of all, in general, they think that first, on the early round, they will get low cost and medium level investors. So, you know, there are also different types of investors, top tier funds, then medium level funds, but very solid ones, and a lot of investors who are really spreading helicopter money, putting 5, 10K to every second project. And all investors have different reputations. So many startups, they mistakenly think that, okay, on the early round, when we are at the beginning of our journey, we will not make any KYC. We will not care who gives us money. If someone gives us money, that's cool. We close the deal. And when we get more traction, we go to the top tier funds. But that does not work like this. That works the opposite way in reality. Top tier funds will never enter your cap table if you have there some shitty players, dumpers, or someone like these with bad reputation, etc. They really care about this. And who is on your cap table? This question you will hear from each and every investor who's considering to invest in your startup. So please be careful from whom do you take money. Make at least some basic due diligence. For example, on InnMind, we do not work. We are very, very careful with whom do we work. And if we see that the investor's behavior is weird, and in crypto space, it is quite a typical thing, yeah? So for example, yesterday he was a VC investing in the startups, and tomorrow he starts selling his services to startups as an advisor or consultant or whatever else. So that is already a red flag. Or if our respective partners say that this investor, that he already was dumping with a few startups beforehand. So we stop sharing deal flow with these type of investors. And startups should be also very careful from whom do they have do they get money? Because on the later stage, it will be sometimes very difficult to kick out the investors with bad reputation if you already have signed an agreement with them and took their money.
Awesome. We have clearly understood the general approach of raising funds, regardless of the form of money, the many main mistakes we've been talking countless times. By the way, how personally, the great advice that the fundraising is the founder's job. No way, no objections. But how InnMind may help NFT startups founders in fundraising way? Explain, please.
Oh, well, that's quite straightforward. So first of all, each and every startup, doesn't matter if you are building NFT, DeFi, or if you are building, new engine on the hydrogen fuel, you have to create a startup profile on InnMind. And this is also your window to the VC network, because all our investors, they use InnMind platform as a tool, where instead of receiving pitch decks and information about startups in various sources, downloading it on email, on Telegram, WhatsApp, somewhere else, they have everything in one place: dashboard, pipeline, startup profile, all the information about traction, about project, the pitch deck, the funding round details, etc. For investors, it's very convenient, and for startups, it's very convenient too. Then once the startup profile is created, and if the startup opens the active funding round, it's the feature on the startup profile, then the matchmaking algorithm starts working. And it works in a way like, on the dating websites, where the algorithm analyzes the profile criteria of the investors. So what stage they are interested in, what amount they are investing, in what sectors, in what industries, etc., etc., and then matches it with the points that you described in your startup profile. So if you are the startup from Europe in B2B SaaS, or if you are NFT startup doing token sale, then it will be shown to investors who are investing in the NFT startups and entering the token raise instead of equity. And the third thing, so in addition to this algorithm where we match, we send the recommended startups to investors, get feedback, and then once investor is interested, we either introduce them to each other or they connect directly. There is also a chat on the platform where the startups can pitch to investors themselves on the chat. Plus, we also have regular events, and actually thanks to pandemic, we have them, because previously we were doing more offline meetups, and of course it's very limited, because you can't, if you live in Moscow and London, you can't attend an offline meetup in Switzerland or Germany, right? So since pandemic started, we moved our offline meetups to online, and we called it VC Shark Tanks. But right now we call it a little bit different, like pitching sessions, because even the word Shark Tank is copyrighted or trademarked. So I guess we are not allowed to use it anymore as a name for the events. So these are pitching sessions where we invite, let's say, usually in non-crypto sector, up to 5-6 VCs and up to 8 startups. But in our DeFi and NFT VC Shark pitching sessions, usually we have the same amount of investors as startups. So it's a kind of a little bit unique situation, because we have more investors interested in good startups than really good projects. So in these pitching sessions, they meet together in Zoom, like we meet with Evgeny today. And startups have 5 minutes to pitch to VCs, very relevant VCs with great expertise from the sector. They then we have unlimited Q&A, so investors can ask questions to understand better the details of the project. And then immediately after session, we collect feedback from investors and introduce them directly to the startups that they liked and want to follow up for investment with. Plus, everything is streamed live in YouTube and LinkedIn for educational purposes. So those startups who are not yet ready to pitch to VCs or who never have done it in past, they can watch the recordings and understand what should be included in the pitch, how investors react on different parameters, or what questions do they ask most usually, etc., etc.
Well, so guys, if you are an NFT project looking for funds, please don't forget to register at InnMind.com, the link below, and to use InnMind tools for raising funds. And by the way, the final, but a couple funny question. I do remember, if I'm not mistaken, that in 2017, you were planning to issue InnMind tokens for ICO. Are you planning to issue InnMind NFTs today in 2021?
That's indeed funny that you reminded about that. Look, in 2017, we were investigating, researching, experimenting with that. And we did not progress because from one side, it looked very logical to tokenize InnMind business model, to incentivize the user's behavior, to give added value from tokenization to them. But at that time, both me and my team, we were learning. We did not have enough expertise at all and no understanding. So we were relying on big experts from the market. And when you are relying on big experts, you can't expect quite often, not always, but you can't expect efficiency in timing and progress. This time, we are still thinking about this, to be honest, and we discussed with my partners that it could be cool to implement some tokenization for InnMind business model. Will it be in the NFT format? I'm not sure because, maybe tokenizing fundraising part, maybe it can work, I'm not sure in what form of tokens, NFT tokens or traditional tokens, but it is logical, and I think that one day there is a chance, I would never say no, that one day we can make it, but there is no 100% guarantee yet. So we are playing around, and I very often discuss it with my founding team and my partners, and we from time to time brainstorm about that. So if you have some great ideas, Evgeny, I will be super happy to hear that.
Well, all the tools are available for us, for our business. So thank you very much, Nelli, for sharing your experience in InnMind. Ladies and gentlemen, you were listening to the NIFTSY Podcast. It is supported by the NIFTSY Protocol, the member of InnMind, by the way. So like, comment, subscribe, and hit the bell button for not missing the future episodes. Nelli Orlova, the founder and CEO of InnMind, and Eugene, aka Crypto MC, were with you. Thank you for listening, and see you in the next episodes.
Thank you for listening. And if you have any questions that we did not answer during this interview, write them in the comments, please. And I will gladly have a look afterwards and reply in written form. And thank you, Evgeny. It was a pleasure to talk to you as usually.